What's up, guys? Welcome back to DCA. Today, what we're going to do is continue our investigation of various metrics which can help us identify where we may be at in the market cycle overall. So specifically, what we're going to be looking at today is called the relative unrealized profit and loss. What these metrics have historically been very accurate in indicating is where the market cycle bottom has occurred. And when we're at these levels, typically we consolidate for a bit and then head up into new price levels and therefore a new paradigm for the price of Bitcoin. So, specifically, what this metric does, it looks at every Bitcoin on the network and determines the last time that they moved on the network. Are these coins currently at a profit or at a loss? So, in other words, currently trading at $38,500. Let's suppose you bought a Bitcoin at $60,000, but you have not sold that Bitcoin. Well, you would be trading currently at an unrealized loss. Okay, so your unrealized loss would be around $21,500. Conversely, let's suppose you bought a Bitcoin at $20,000 and you've just been sitting on that Bitcoin. You would be at an unrealized profit of around $18,500. So what this metric does is adds all of the unrealized profit and all unrealized loss and divides these by the market cap. So what this metric does then is gives us a ratio of the total amount in profit versus the market cap, as well as the total amount in loss versus the market cap. So we then get a number for the relative unrealized profit and a different number for the relative unrealized loss. And we can compare these numbers. And we're going to do that today and take a look at historically what these values have indicated to us and currently where are we at and what might that mean for the price of Bitcoin going forward. Okay, so this is the relative unrealized profit in the orange graph on the bottom. On the top, we simply have the price of Bitcoin. So what you can see here is, as we said, the point at which all of the coins in profit divided by the market cap. Okay, so at times when we've been reaching a market cycle peak, such as in 2011, such as in the end of 2013, the end of 2017, and the beginning of 2021, we've had our market cycle peaks. And you can see each time we have been at a point where the relative profit, the relative unrealized profit, has been very high with relation to the market cap. And then during the times where we head into more bearish segments of the market, we head down to this level where we traditionally have been between a zero point 0.4 to a 0.3 level. So in other words, as a ratio of the market cap, the coins that have been in profit have been between 30 to 40% of the total market cap. Now, interestingly, you can see that each market cycle, right at the peak, we've actually had a place where the relative unrealized profit has been falling with relation to the prior market cycle. In fact, if we just draw a simple trend line through these, you can see that we've actually almost perfectly formed a a downward trend that touches this upper limit of the trend line, and then we start to head down from there. Now, this market cycle, I think we all know at this point that we hit a market cycle peak at 69K actually out here in November. But based on numerous metrics, you could look from total volume, total retail interest in the market, etc. Numerous metrics have indicated that a true market cycle peak, while not in terms of price, occurred back here in January and February. And this is just yet another metric that indicates that that is true. While we did hit a market cycle dollar peak in November, all of the on-chain metrics, all of the various price metrics, all of the sentiment metrics, all indicate that a more true market cycle peak occurred out here in January and February. So we've had this place where we're forming a downward trend over time in terms of the unrealized or the relative unrealized profit. Once we come down to this point 0.3 to point 0.4 level, so we're looking over here now. Once we're down to this point 0.3 or point 0.4 level, that is historically where the price has sort of been reaching a bottom. So here we got down into this. Here it was about 0.38. Back in the 2015 bear market, it got all the way down to around a point 0.3. Then in the 2019 market, again, we were down very close to point 0.3. Then, COVID, we got all the way down to point 0.3. So these are times when the unrealized profit, so in other words, if you just look at the average price of the average Bitcoin in profit and compare it to the market cap, it's been very low. Okay. And these typically occur right in this band here, right in this point 0.3 up to point 0.4 level. And remember, this is with relation to the market cap. Okay, now what I want to do is show you unrealized loss, relative unrealized loss. And this is the same thing as profit. However, it's taking the sum of all the coins at loss, adding up the relative unrealized loss, and dividing it by the market cap. And you can see that, during the worst points in the market, so back in November of 2011, so basically October through November, and then points like here in January of 2015, and then here in late 2018, early 2019, this level spikes up also at the COVID capitulation event, although not to as severe of a degree that time. But these levels spike up, and this basically just indicates that the average coin on the network is sitting at quite a large loss. Now, if you look at where we're at right now, we are actually, not that far off of this baseline. And what does the baseline mean? It means that essentially all of the coins on the network are, for the most part, sitting in profit. And these typically, occur at times when we're reaching to or close to prior market cycle tops. So you can see that we start to get down to this baseline around here back in 2016, 2017. And if we just look over here, right when we're starting to get down to that baseline, the price is at $850 here. And if you go back to the prior all-time high, that occurred at around $1,100. So this kind of makes sense. Who are the people that are holding coins in the bear market? So, technically we're still in a bear market out here. And the people that are holding coins are going to be your long-term holders. Well, what do we know about long-term holders? They typically do not buy in the parabolic phases of the market. So those individuals, while we're not, we haven't got back to our prior all-time high price, those individuals never bought a coin for that high of a price. They waited until this person who bought up here at $1,100 capitulated, because the people that buy at these prices are the same people that capitulate when the price is dropping. So I think the first thing you should do is ask yourself, is that you? Are you the kind of person who has been buying at the parabolic phases of the market and then capitulating when the price drops? Because if that is you, you should step back and consider your investment strategy. Because what I preach on this channel over and over and over again is smart money versus quote unquote dumb money. The smart money are the individuals buying when the market is depressed and all of the retail investment has left the market. The dumb money are the ones buying into the market strength. They are buying into market strength. So, buying at 500, 600, 700, 800 back in 2013, and then capitulating when the price starts to fall. The same thing goes in 2018. The same thing goes in 2021. So the smart money are the guys buying when the price is depressed. So, buying at $6,000, $10,000, even $15,000. And then they're dumping the asset onto the retail market when the price is moving up to new highs. And that's why you see that the relative unrealized loss, even though we're not back at the prior all-time high, the people that bought at $850 and above have all capitulated by that point. They've been shaken out of the market. Okay. So That is how you can be at a place where the unrealized loss is approaching zero, and yet you're not even back at your prior all-time high yet. And we see this in every market cycle. The unrealized loss is approaching zero prior to getting back to the prior all-time high. And this just is a perfect, it's in my opinion, it's a perfect macro level perspective on the psychology of long-term smart money holders versus dumb retail money coming in, FOMOing in, and then capitulating. Now, that's an aside though, but I think that's a very important topic, and that's something you should truly take to heart if you are that type of investor. If you're the type of investor that's buying into the parabolic phase of the market and then capitulating as soon as you start to see price weakness. You know, Even if you've made the mistake of buying into the parabolic phase, generally holding is going to, holding that asset is going to, in the long run, going to suit you better than someone who capitulates and then tries to buy back and then sell the second it keeps going down, etc. Chasing every single market cycle pump that you see, for instance, right now going from 32,000 up to 39,000, you'll probably have lots of people who will be chasing this pump. And then if we continue in our downtrend that we're in, if we continue back down, those will be the same people typically that will capitulate. This is our relative unrealized loss. Now, what we're going to do is compare it to our relative unrealized profit. And something very apparent starts to show itself. These two are now together and they're on the same scale. And in orange, we have our relative unrealized profit, and in blue, we have our relative unrealized loss. Now, what I want you to take note of, and this is the entire point of today's episode, when the relative unrealized loss surpasses the relative unrealized profit, this is typically a very strong indicator that you are approaching the market cycle bottom. And why is this? Because this is the point at which the majority of profit or loss on the network of all coins on the network is being held in loss. So these are points when most of the Bitcoin, most of the potential profit or loss is in terms of loss on the network. And these are typically times when it is very easy to capitulate your asset, to become shaken out of the market. And even the last long-term holders who have been holding their nerve ever since, 1100 in this case, all the way down to $300, you know, they've held their nerve. And then what happens? Well, we get another capitulation and the price drops yet again another 50% from even the $300 level. So this is how you get market resets, because it shakes out the very last vestiges of the long-term holders, those that are potentially going to sell. Because if you've held from 1100 all the way down to 300 and then all the way through a drop down to 150, you're probably going to hold no matter what happens. There is no price at that point which you're going to sell your asset, because you've lost so much money. It's not even worth it to sell your asset, because your total investment is now essentially, as a percentage of what you started with, it's so low that if you're if you've made it to that point, you might as well just stick it out and hope it doesn't go to zero. And that's what we've seen in the past. We've seen that these times when the relative unrealized loss surpasses the relative unrealized profit, these are the times when we then consolidate for a few more months and then start an uptrend. So we saw it back here in 2011. Notice we surpass the relative unrealized loss surpasses the relative unrealized profit right around here in September. And from there we go down just for a bit more. And then in January, realistically in November, right when we get to nearing our, worst stages of the cycle, that's right when we start our trend back upwards. So within just a few months. Then we have a longer bear market back in 2014 and 2015. We surpassed this level in January of 2015. Okay, so our net our relative unrealized loss surpasses our relative unrealized profit here, right at around $300. And from that point, we have a big drop down, 50% down. And, this is just a day or two that this happens. And then from there, we start our trend back up. All right. So both times when the relative unrealized loss is surpassing the relative unrealized profit. Then we can see this happens yet again in 2018. Where does it happen? Right at this massive capitulation event that occurs right at around $6,500. So in November of 2018, we drop below, this $6,500 level that we'd been forming a base at for months at this point. We drop below in December of 2018. We reach this point of maximum pain that occurs right here at around December of 2018, and then we start an uptrend. And yet again, we see it happen with the COVID event. Okay, so this begs the question, where are we at right now? And as you can see, we are sitting at a relative unrealized profit of around zero point 0.5 compared to our relative unrealized loss of zero point 0.1. So there's a few things that we can take note of here. First of all, we've been in a downtrend for the relative unrealized profit ever since about February. Okay, so we reached our peak at around 0.76 in February, and we've just been heading down since then. Realistically, even though we're in a downtrend, we're sort of within a downtrend of a downtrend, because if you go back to, if we go back to say here in November, we've been moving down even faster since then. So we've been sort of more rapidly moving down. So we've went from around 0.65 at the peak in November all the way down to where we're at now at around zero point 0.5. What you can see is also that the relative unrealized loss is in an uptrend. Okay. So this has been trending upwards ever since about realistically November. It's been trending up almost at the same time that, we've been trending down with our relative unrealized profit. Now, there's a few things you can note here. First of all, is we did form a similar pattern back in May through July. Okay, so, as we were coming down, we started to form a more rapid downtrend with regards to our relative unrealized profit, and then reached this bottom here at around 0.51. First of all, you'll notice that we've actually surpassed that now to the downside. We've went below that, being at 0.5. Now, what you'll notice is we are around zero point 0.1 away from getting into this green band. That's the first thing that, strikes me. Second of all is the fact that currently our relative unrealized loss is sitting at around zero point 0.1. So there's still a fair way to go to get up to the point where the relative unrealized loss could surpass the relative unrealized profit. There's a few things that we need to take note of historically. The distance by which the relative unrealized loss surpasses the profit has been decreasing over time. Okay. So, this trend I do expect to continue for the fact that, we're just simply seeing overall less volatility in the market. Okay. So less volatility leads to this place where we're seeing less severe price trends in one way or the other. A lot of this is likely due, I think a lot of this inability for Bitcoin to go on these massive parabolic runs anymore, or see the same type of severe downswings. I think a lot of this is going to be due to the derivatives markets. The derivatives markets are making it so that the price simply can't swing massively in one direction or the other anymore, because once the derivatives build up on one side or the other, you have large institutional type or large whale like investors coming in and sort of attempting to liquidate or create a liquidation cascade of these leveraged investors. So I think that's one thing we're seeing. And I think overall, just as the market cap continues to increase in size more and more, we're getting into a place where it's just simply put more difficult to have the price drive in these extremes. Now, with that said, we still went from 69,000 all the way down to 30,000 in a relative short order. What we're saying overall here is, we may not see the market cycle bottom until these values sort of get within closer proximity within one another. And that's just the way that markets work. We typically will see trend reversals once we reach some point of quote unquote maximum pain. So this would be some point where the network overall becomes at a net loss, which would be indicated by the relative unrealized loss being above the relative unrealized profit. And what we're seeing now is this point is still, fairly far away from one another. Now, to give you an idea, this fall from 69K all the way down to where we're at now at around 38K, this was a net change of 0.16 on the relative unrealized profit. Back in May, it was a net change of around 0.25 because we went from around 0.75 all the way down to 0.5. Obviously, as we start to move down, if we started to get into around the $30,000 level or so, this number would precipitously drop. I think we'd go even, I think we would go lower than we're seeing right now, lower than we went before anyway. We got all the way down to 0.48, but people have been acquiring coins during this time. So that's raising the overall average price of Bitcoin held on the network. So that price has been increasing. And if we were to go down into the 30K or even high 28Ks, I think you could start to see these values approach one another. And where might they cross? Well, currently, I suspect that level would probably be somewhere at around mid 20K. So 24 to 25K. Based on the fact that the average price of Bitcoin held on the network is around 24K. So as time goes on, though, that it would be expected to slightly increase based on where we're trading at right now. And if you assume that a large majority of the people who are short-term holders holding the price or holding Bitcoin above that price, many of those people have already capitulated. So that price will likely stay right around there, 25K, but that is where we may expect to see these lines cross. And it will just depend on if we need to see that happen again in this market cycle. So I think a lot of the metrics are showing us that we are in a clear and defined downtrend. And, given the macro level uncertainty in the market, I don't expect something to, at least in the long term, there may be a month or two here or there where the price rises, like we're seeing right now, a week or so where the price is rising. But in the long term, I don't expect the price to just magically, without any retail investor sentiment backing it, I don't expect the price to just shoot to new all-time highs. And therefore, I actually expect it to continue in this downtrend that we're in. And to where we go, I'm sort of looking at the upper 20K level. But if things, if we go into a general market downtrend, in other words, if the stock market heads down, if employment numbers start to look bad, etc., you could see it get worse than this. And this is just the bottom line, guys. And as you know, if you watch the channel, I'm I'm not, I'm not unfairly being bearish against Bitcoin. I'm trying to assess the market objectively and just relay that information to you based on everything we're seeing in the market overall. So that's kind of where I'm at with this, guys. I think this is a very good metric to be looking at. And, um, I think seeing this unrealized loss surpass the unrealized profit is a very good indication that the market has reached a point of maximal pain and will likely, in very short order, begin to form a new uptrend from there into perhaps a next market cycle. So this is something we'll continue watching, and that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.